Hello everyone, this is Zak Gardezy. I'm the host of Money Minutes. I'm also the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm a private wealth advisor and a certified financial planner. So we've got a lot to talk about on this episode. A lot of important things happening around the world and in the market. We'll talk about what's going on with the stock market. We'll talk about inflation. I'll share with you my outlook on everything that's going on. And then I'll also talk about how investors at Wealthstone should approach their portfolio, and then how investors with concentrated stock positions should also be thinking right now. So let's get right into it. So what's going on with the market? Well, there's a tale of two markets going on right now. You have the tech stocks doing phenomenally well, and then you have the rest of the market, which in certain pockets are doing really well. Other areas are having a bit of a lackluster year. For example, international stocks having a strong year, small caps having a pretty good year, mid caps, although they're doing quite well, they're underperforming some of those other areas. But then if we eliminate tech from all of these different indexes that we're tracking, it's really the tech stocks that are pushing this market forward, which again is no surprise. Artificial intelligence has basically resurged, especially since some of the fears earlier this year. A whole new wave of agentic AI, physical AI, robots, all of these new cool technologies that are coming out is causing many of these major tech and AI stocks to hit record profits and catapulting their stocks to the highest levels that we've really ever seen. So this has been really good for investors such as Wealthstone clients who have a lot of exposure in these areas. But for investors who've missed out, you're probably sensing some FOMO or don't really know how to get into this market. Well, you really have to be careful right now. Your risk tolerance, this should really drive your decision making, your financial plan, sitting with your financial advisor and talking about how should I get into this market. Or if you're an investor that has a considerable concentrated position, maybe you work for some of these companies like Nvidia, AMD, Apple, Micron, a lot of these great companies that have done very well, you might be wondering, well, I have so much exposure to these stocks. What should I do? What if these stocks crash? Or what if you have other goals? Maybe retirement, maybe a major purchase, something you're thinking about doing with this money and you're seeing your stock go up a lot, but maybe you can't sell it because of a significant tax bill. So these are conversations you should have with your financial advisor, especially one that has a deep expertise in managing concentrated stock positions. I wrote a book on this subject, so I'd be happy to talk about it with you. But ultimately, for investors at Wealthstone, we're sitting on gains, some strong gains in these tech and AI names. But throughout the year and towards the end of last year, we raised a considerable amount of cash in other parts of our portfolios. So then that way, if there's a crash or significant market stress, we'll be ready to buy when the time comes. And so we're still sitting on ample cash. I'm really happy with our positioning. And again, for investors in concentrated stock positions, this is an important time to talk about hedging. This is an important time to talk about reducing your concentrated stock risk. I'm not saying that the market will crash any moment now, but we're seeing a lot of risk factors, many of which I'll talk about in later parts of this video. So inflation. Inflation is the most important thing going on right now in the economy and affecting the stock market. And it's driven by basically the geopolitical events that are going on right now. You've got, of course, the war in Ukraine that has continued to cause elevated energy prices as Russia stays out of the energy market. And then additionally, you have the war in Iran, which has caused a huge energy shock. The entire Middle East basically is stuck trying to figure out what to do with all of the oil that they have. And then you have Iran, which has also been offline for a significant amount of time. You have Venezuela, who's dealing with their own energy issues and trying to sell some of that oil, export that oil around the world. But again, there's a lot of issues going on with energy prices around the world, which is causing elevated prices, which makes a lot of sense. Higher energy prices, higher oil prices, eventually higher gas prices. It's more expensive to ship things. Basic things like groceries, for example, getting from point A to point B become more expensive, causing elevated prices. We're seeing all of these things now bleeding into the economy, and it's still really early, but we're seeing it. For example, the April CPI report that came out, the Consumer Price Index, came in at 3.8%, which is the highest reading we've seen since 2023. Wholesale inflation, very high. You have the 30-year Treasury bond in the US going over 5%. You have the CME Fed Watch tool, which is sort of a futures market aggregated research tool that tells us where the market thinks interest rates are heading. We went from interest rate cuts to now interest rate increases, right? This is a major shift, one that the market is starting to price in now, but I still don't think the market really believes it because we are still having these ongoing negotiations with Iran. But if those negotiations were to fail, I think we could see a cascading negative effect in the economy and then quickly in the stock market as well. And what's that domino effect? We've talked about it before. So in this case, all of these things, this is sort of the beauty of economics, are interconnected. You know, let's start with the energy issue. Higher energy prices leads to eventually higher gas prices. These higher gas prices means consumers spend more on gas and possibly pull back on spending in other areas. That hurts those businesses. When those businesses make less money, they may have to lay off their employees, which means higher unemployment. But the problem is we're going to have potentially higher unemployment at the same time that we have higher inflation. So what does that mean? The Federal Reserve can't just lower interest rates because then that will also cause higher inflation. So then the Federal Reserve is basically stuck without their most important tool, which is controlling interest rates. So then you have this sort of issue with higher unemployment, these energy issues that will persist. The economy will slowly find its way towards a recession if this war is not settled, if energy markets aren't restored. And then, of course, all of this then affects the stock market. Higher interest rates means that stock prices typically go down because that's higher borrowing costs for companies. And again, all of those other economic factors also cause lower stock prices too. Travel stocks, luxury goods, consumer goods. Many of these stocks rely on consumers going out and spending money. But if they can barely afford to get gas or put food on the table, they're going to pull back their spending in those areas. We may not be seeing a lot of that right now, but if this war continues, if energy prices continue to stay high, we'll see more and more of that. So ultimately, there are a lot of risks in the market. So how should investors manage those risks? Number one, you should look at your portfolio's overall risk exposure. I don't think, unless maybe this is in line with your plan or your risk tolerance, for some people it is, to be taking on a significant amount of risk at this point. For Wealthstone clients, most of our clients have de-risked considerably throughout the year, which I think is the wise decision to make. For investors who have concentrated stock positions, if you work for many of these top AI and tech stocks, it makes a lot of sense to reduce your risk exposure, but to do so tax efficiently as well. Don't be irrational with it. Don't make a quick decision. Talk to a financial advisor. So we'll continue to have our investment allocations the way they are at Wealthstone, as I talked about earlier. We're diversified across our tech and AI names. We have private market exposure through private equity, real estate, private credit, many of these areas. We also have considerable cash positions, which we're earning interest on this cash, so it's not like we're making nothing out of it, but we have that safety net in case the market does come down meaningfully. And as always, talk to a financial advisor, your financial planner, to figure out where exactly you should be invested, how you should be invested. Don't delay this conversation, because as these events unfold, we're going to see more and more risk in the market, and you don't want to be caught in the downward spiral of the market with a significant risk exposure in your portfolio. So hopefully this video helps you understand kind of what's going on in the market right now, how we're allocated here at Wealthstone, what's my overall views on everything that's going on, and what the risks are, right? Now, it is possible that the negotiations could potentially lead to some sort of a deal. The war ends, the strait opens up, oil prices do come back down, gas prices come back down. All of those things are possible, and I think that's why the market has stayed elevated. But if we start to get evidence that those negotiations aren't going well, or maybe they stop, or maybe a significant war breaks out in Iran, well then what this could mean is that higher energy prices than where we are today, and this could mean that we head towards a potential recession. So there are a lot of risks on the table. It's really important to consult with your financial advisor. So hopefully this helps answer a lot of your questions right now. As always, if you have any further questions, please don't hesitate to reach out. Thank you very much.